Bitcoin's rallied for the last 2 days, but it's still $16,000 from the high. That's about 13% off the top. So my question is, has it done enough yet to hold out for the rest of this bull market, or are we still on the verge of breaking down at that make or break point that I've been talking about on the channel for a little while now? Things aren't looking as rosy as they once did, and it all stems from significant breakdown points, basically turning points. So today's video, I want to update those turning points, have a look at where the markets sit, and we'll cover Bitcoin, cryptos, the stock markets, and the real estate cycle. So hit the like button if you haven't already, and of course subscribe to the channel if you're new. We did hit 360,000, so thank you very much for all of your support here over the last several years. We've been going very, very strong here with the cycles, ups and downs and ups, and hopefully not down again yet. So Bitcoin rallied 2 days. These are the big things here, looking for an overbalance in time and price. This is just on the short term now. And what the overbalance in time and price means is, are we seeing a change in trend? We've looked at them many times before to the downside, essentially price and time overbalancing. That would mean that you would see further price depreciation over a longer period of time. And that essentially just gives you the weighting. There's more sellers willing to sell longer for longer periods of time at lower prices, as opposed to the other way around, where the bulls would want to see. You want to see those sellers getting outbid and the prices getting higher, so like higher lows forming. So in terms of the short term, we have a rally now of 3 days. So there is an inside, an outside, and an up. Don't worry about those terms. Essentially, we've got 3 of these days heading up from the low, but it's only at $8,200 so far. We haven't got to the end yet. There is no turnaround point yet. We haven't broken this low, so there is still time for it to rally. The rally needs to at least get towards 113-ish thousand, just for a round number, because the prior rally was about $9,100 from that low, and that lasted 3 days. So if we happen to go up today and take out a point of about 112,800, and as I said, for a round number 113, that'll give us an overbalance in time, because we would have 4 days up, and we would have an overbalance in price, because you would see a bigger gain to the upside. So at the moment, I don't think things are completely safe yet out of this decline, but at least it's working towards basically getting to that safety point. And one of those first areas that it has been able to close above and hopefully begin some level of consolidation are these lows here at 107, 108. That's the white line across the screen. And it's also above the $20 billion liquidation day. So that was Friday into Saturday morning last week. $20 billion. We saw it drop from 122 down to $107,000, and obviously huge liquidations that day. So if we can get that, great. At least that's kind of like the earliest starting point. If there is a pullback, ideally it stays above 107, 108, because that would then still hold us above all of the support here. That one there, this one here, and of course the liquidation lows, which means that buyers are stepping back in at those slightly higher prices and potentially getting ready for that move. So this is still in that sort of mixed bag signals. It's a difficult time here, and I don't think we're at that safety point yet, but it's like pulling itself back into a safer position than where it was closing underneath all of those previous levels. Now from 113,000, it's basically a safety level every $2,000 to $3,000 above that. The next is 115,000. That is the current 50% of the drawdown, so right through the middle. That's not about a 50% gain, it's a 50% of the move to the downside. And the move to the downside is $22,500, $23,000. And so that level right through the middle is $115,000. So 113, 115. If it's able to overcome those levels, great. Next level is still this white line here. That's at 118,000, and day by day we're getting a little higher here on the 7-year resistance line. That's that diagonal that I have drawn across the screen. If it happens today, well, that price is about 118,800. So 113, 115, 118, and for a nice clean number above it, 119. Any failures at this point could be underneath the 115K, could be underneath the 118 to 120K. That could result in further downsides to come back and test the support. That's not what we want to see. But if it happens, support tested, high lows, and then hopefully a climb back above. Otherwise, watch out for another test of the lows. And then the yellow area I have right here, that is the $98,000 to $101,000 level, which is also the larger 50%. So we haven't broken down from that, which is why I still have to lean on the bullish side, because we haven't broken down past the longer term 50%. As you can see here, it sits at $100,400 and also lines up with those two previous swing lows. So although things are a little off center here, it's not necessarily completely safe on the short term. The longer term still holding out so well here, as long as it's above 98 to 100,000. So provided the market holds above the 50% levels, then we still have the price targets to the upside. They still sit while this low is in at 135,000, and then above that in the mid 140s. And then if we can get a little bit crazier, we can look towards the mid 160s. We do have a new price target now that we've got this low on the chart, and that low's at 100K. And this is the extension that we can now look at. Comes in at about 152,000. So if we were to add in all of our other extensions that bring up the price clusters, there's a lot of lines that show up, so I'm not going to go through those ones now. But essentially, we're just looking for price clusters where there is a lot of resistance forming. We'd still get a rough average there between 144 to 148. But we've now got another target to have a look at to the upside. But on the flip side of that, we also have another resistance level at the 50%, which is very close to the previous highs. So you can see this is the target that we're looking at, and that comes in also at around $126,000. So add that one to the list, above 120, and then we look towards that 126 again. Nice clean breaks of that. Then we can start to get excited about some of these next price targets to the upside. For the signal indicators here, we're still on the 3-bar down signal, all-time high, and then we had red, red, red. Grays don't reset any counts, blues would, and greens do, but we only had red, gray, red, red. So essentially the count is 1, 2, 3 down bars, lower highs, lower lows off the all-time high, which is a significant top. And from that level, we've not recovered yet. What's happened in the past? Well, it's taken at least 34 days to test the top, and then the overall decline there, 31%. So that was the last time we saw this exact signal from, let's say, the exact significant turning point. It was an all-time high. We got another all-time high. We got the 3 days down. You can see the 3 days down. This is not a signal to be messed with. And the last time we saw it, new all-time high. We got the signal again from that all-time high price, down, down, down. Lower highs, lower lows, and guess what? 33.5% to the downside. It took 237 days to go from that start of the signal. Well, you had the 3 days after the top, so we're measuring from the top because we want to see the price break out of that top. It took 237 days to get back above that price, and like we saw here, 34 days. But if we got any sort of clean move above that high, I would extend it out to here, 155 days. And then we're just getting silly here, looking at the next levels that broke above all of these tops around 205 days. I don't know if we've got that much time left in the cycle to wait around 200 plus days to get to a new all-time high, a convincing one that breaks through the tops. So ideally, we get this recovery relatively soon. And I've been talking about this week, if not next week, because that's essentially the end of October there. Then we can get into that November period for the break to new fresh prices. TIA Premium will be capped soon, and the price will be rising for the new edition. So if you do want to get in on it while it is still at this lower price, check out the link in the top of the video description, and it'll take you right there to the checkout page. So regarding the economy and the S&P 500, market is still anticipating 2 more cuts this year, almost a 100% chance that there is going to be 2 cuts. You can see we've just got a slight touch with a hold. We've got that meeting coming up next week. So in the next 8 days, we should see whether the Fed is going to cut interest rates once again. The fear and greed index is also holding out here. We've got some extreme fear and it's just starting to climb higher. So the S&P 500 isn't looking too bad, especially as it's been putting in fresh highs and almost new all-time high closing prices. We take a look at the SPX. We're very close to that new all-time high, especially on that close. It's probably like the third highest close in history. And with the S&P 500 on the futures market, so our E-mini, we're following the 5-year cycle here. You can see on the line chart, it's doing relatively well. Yesterday, nice big jump higher, slightly different to this little period here. However, check out that jump that comes in the next few days. So it had a significant jump 5 years ago, pulls back. There was another decline here, but overall this period has been a little stronger than 5 years ago. You can see we did get the top, and then the next top for the S&P 500 was actually higher, whereas before it was lower, but it still went through a bit of a churn in price. You didn't get these clear trends to the upside, and then here is that churn as well. This period, it churned higher. This period, it churned sideways, put in that drop, churned, and then started to move higher, churn, started to move higher. So while the S&P is still holding out all right in the 18-year cycle, we can still see that there are periods where other markets don't necessarily hold out all the way to the end. One of those that we're seeing is the home builders ETF that we show in the bubble chart here. But before I get to that, Bitcoin typically tops before the S&P 500. And the only time that it has been similar declines, so we saw bear markets for Bitcoin and bear markets for the S&P 500, was 2022. Whereas prior to that, you had the top for Bitcoin in 2017, the top for the S&P 500 in 2018. Yes, there was a very significant decline. You got to remember the time period there. These were pretty big moves to the downside. You got 10% close to close, but there was a bigger swing there. And it had been about 2 years, a year and a half, since there was any sort of decline like that. So although it doesn't look like much on the chart, at the time, it is pretty significant. And I can tell you at that time, 2018, there was a lot of talk around another recession and how the market had to collapse because we'd been on the longest bull market in history. If you remember 2018, 2019, it was all about this 10-year bull market and that we hadn't seen anything like this in decades. You know, had to go back to the 90s and then they looked back even further into the 50s and 60s. And it was all about this huge, huge collapse. But the S&P 500 put in a new top mid 2018, bigger decline, new top again mid 2019, new all-time high, another top in early 2020. And then of course we had the COVID collapse, which is a bigger collapse overall. And then everything ran off to the races. And so in that period, you had Bitcoin topping first, then the S&P, and essentially it was a churny market until it got going again mid 2020. So it's after the COVID. But Bitcoin went on its bear market through that period. So yes, S&P had another high, big corrections, really, really volatile, and then everything lowered around that late 2018 period before it all started to move again. Prior to that, you also had the S&P 500 basically crawling to this top after it came out of the lows of 2011 and 2012, but Bitcoin put in its top and then had a severe bear market. It was around 88% from that high to the low, but the S&P 500 continued to climb. And the only other time earlier to that is around this Genesis period, which isn't necessarily a cycle in itself, but just having a look at how the S&P rallied, it pulled back, Bitcoin kept running here, and then you can see that it topped first, declined into 2011, and the S&P 500 also had its slightly lower high here, but declined. That was where that big move was to the downside, and then things started to run again. So in these two major cycles, Bitcoin topped and it was a clear top. It's basically up, tries to hold the levels and then collapses. Whereas the S&P 500 was grinding higher for over a year. And then it basically went sideways through the period that Bitcoin was consolidating. And then it started to rally for its next bull market. The S&P 500 had another low and then it started to rally. And then the prior cycle was similar, right? You got the grind and then so on. 2017, Bitcoin tops first. S&P 500 is basically putting in a massive megaphone pattern, higher highs, higher lows over a very long period of time. And then they start to run together. And the only time that it was almost synchronized was the last cycle. So with that history in mind, what if, and this is kind of the point that I guess the bulls want to tune out or block their ears, is what if S&P 500 continues to climb here and this is it for Bitcoin? So this was at the top, and then Bitcoin starts to do its thing, maybe puts in its decline. S&P 500 continues to climb higher like it has done 2 of those previous cycles. And in that third one, that's basically 2 months was the difference between the tops. Bitcoin tops in November and the S&P 500 tops January 2nd. Okay, so basically 2 months, and then they all go on the decline together. That's one theory that I have. As I said, it hasn't broken down yet, but I'm keeping the theory there because this is what it has done throughout its entire cycle. And as we can see with the end of the cycle coming up, you've got the lower high forming on the white line here, which is your home builders ETF. And that is our signal for one of the signals for the end of the real estate cycle. But for the others, you can still see the bubble heading higher. Obviously, the red line, I've changed that from green to red just so it replicates the word up here. And also gold, which is in the yellow, is at new fresh highs in the last 24 hours, new all-time high, new highest daily closing price. But do note those other 2 reversal days have been pretty significant on the volume, and the volume is just beginning to decline on the up days. I don't look at things to say that they have to peak and then it collapses, because all too many times you've got everyone talking about we're all shorting gold here, we're shorting gold here, we're shorting gold here, shorting gold here, shorting gold here. Yes, I win. No, you don't. Then they all just got stopped out. So that's the idea. You're not trying to pick the exact point, but some of the signs suggest maybe we're going to go into some sort of topping here, consolidation, and potential correction. But those things take time. It always takes time. And when I talk about a top for gold, I don't think it's the end. I think it just needs another time to consolidate its move, its very significant move, before it can continue to run as it has done throughout this entire multi-year bull market that I've been talking about for quite some time. You got huge consolidation here. This one here was about 3.5 years. This one here, a few months. Again, a few months. And the most recent one was also a few months from April until the breakout in September. So it can do significant moves for a significant amount of time, and then it rests and consolidates the move. And we can see that with the search term volume here. Gold and silver, they peaked out last week, and this is on the 5-year chart. So gold hit new fresh highs for the 5 years in search volume. Silver also did the same thing here. Fresh highs, huge highs there, and they've since pulled back. When you take a look at the last 12 months, they've also hit their peaks there and have pulled back. And then we just zoom in again to the last 90 days to get an even closer look. And that's an even more significant pullback off those fresh highs. In terms of Bitcoin and crypto, this is another point where you might want to block our ears if we're only bullish to the upside or if we're Michael Saylor. The search volume has not really picked up again. Ideally, we should see this thing picking up, at least not breaking into fresh lows. Crypto at 15, Bitcoin at 41 and 38. So that's not too bad there. Crypto is basically flatlining 17 and 15, so it's put in lower lows. But if we zoom out to 12 months, this is where things start to look a little worse for wear. Lower highs, lower lows for Bitcoin, and also for crypto. If we take a look back 12 months, Bitcoin was at 27, so it's still just slightly above that and still slightly above all of that period of April through to June before it put in those next highs in July and August. And we take a look out to 5 years, not looking as good, but we know that this can turn around relatively quickly. Lower highs, lower lows, and it's been putting in much larger lower highs and lower lows throughout this entire period as well. November was that the extreme high that we saw. That was where a lot of the volume came in, like I talked about in yesterday's video. November, going back here, that was the highest volume point along with March. And then since then, the volume has basically died off. And in terms of the market sentiment, that was 2 of those periods. We had March and November where the extreme greed came in. And since then, we've been putting in lower highs and lower lows on a bigger time frame here. So I'm not saying that the cycle is over, but there are some of those longer term timeframes which would take much longer to play out. So there is still the chance for higher upside, but you could assess it like your relative strength index, the RSI, where you start to see lower highs and lower lows. And if you can match those with other indicators that you like to use, or in my case, I'm matching that with some of the sentiment data, then we begin to see a different picture as opposed to price only going up. Now, I'm just presenting you with the data. Some of it is seeming a little more bearish than it did a few days ago, and that is because we're seeing declines in the exchange volume. Remember, we saw this breakout, and that's exactly what we want to see for the bull market. We got the breakout, got to $100 billion, and has since declined back underneath those highs. So there is less interest in trading. Maybe it's all due to the wipeouts, but it's back underneath those levels. 72 billion, those previous highs are at 75 and 79. So ideally, higher lows begin to form somewhere around at least $50 billion. Maybe a touch lower is acceptable, but then it starts to push higher again. Liquidations overall have been relatively stable, $400 million a day. The long-short ratio, you can see up here, relatively balanced, a little more on the short side, but we're not seeing huge differentials there either. The USDT dominance, not playing ball, hopefully yet, but it needs to get back under the levels that we've been discussing for a long time now, and sooner rather than later. I'm giving it October. I've said this week would be ideal, and that level is at least 4.75. That's the 50%, and then back under this white line at 4.6 to get it into this zone here. But unfortunately, it's just doing what it's done every other cycle, and we were hopeful of a mega breakdown, but we did not see the signal, and the mega breakdown was going to come underneath 3.7%. All the dominance has done so far is put in a macro higher low, but it's still got lower highs. So there are these lower highs forming at that point. So while that's the case, where there's still the possibility of that for the bulls, otherwise just got to respect what's going on here, got to respect where people are putting their money, and they seem to be wanting to hold stable coins more than, for one, altcoins, and at the moment, sort of Bitcoin and ETH as well, because we've seen this rise and we've seen it continue to hold. So fingers crossed if we can do that with trading and investing, obviously not, but ideally big drops relatively soon underneath 4.75 and then 4.6 to get it back into this zone. Bitcoin dominance has continued to climb slowly here on the weekly and of course on the daily. We have not got to the overbalance in time and price. The target is 56%. So as I explained, the overbalance in time and price at the beginning of the video, that's the idea again. We want to see more selling coming in, selling for Bitcoin, and that money not going to stablecoins, but into altcoins if you're waiting for an altcoin season. Now, we haven't seen that yet, but at least there is a significant decline here, and any sort of rallies hopefully are met with some resistance, 60, 62%, and then begin to decline again. But for some altcoins, time seems like it is running out. One in particular, and I know people get a little triggered with it, but you can't deny the facts that are showing up on the chart. And that is XRP has continued to decline against Bitcoin after once, twice, 3 times slightly getting above Bitcoin's returns for this cycle and is now back underneath those levels. So going to be watching for any of those lows to break down here because that could be the end of XRP for this cycle. Binance still holding up. Blue here, Ethereum still just holding up, and Solana slightly lower highs continuing to form here. And if it keeps breaking down, then just be on the watch out with that if you do hold some Solana. Ethereum, it has just got to the short-term 50%, but that's going to be a shorter-term move. So let's take a look at the longer-term 50%. That level is 4,100. So it tested it and got rejected. Now we have put in higher lows, but there are still lower highs. So again, this is pretty much where things are going to be starting to look safer, and it's at that make or break period. So in this time frame, and I think we need to get back above 41 at the very least. That's the 50% for this range, and it's all the previous highs. Highs of December, highs of just short of May, and then of course the significant one here in March 2024. So some closes above 41 and ideally 42 would really put ETH back into that stronger position, which means ETH BTC could also start to get its run on to the upside again. I think if it is able to get going again, break past 4.2%, so that's where these highs sit, right through there, then there's a nice chance that we test the 5% level, potentially get towards the 5.3% level for this cycle. So that would just mean that ETH could be outpacing Bitcoin. And ideally, that happens while Bitcoin is also holding up. Because the last thing you want to see is the ETH BTC pair run and you're thinking great, but at the end of the day, everything's going down, but ETH just isn't going down as much as Bitcoin. So hopefully this is all in this last final push to the upside. As I said, with some of the alts, they're just struggling here. You can see the volume's dropped off, bigger volume to the downside. It hasn't really recovered yet, but on the positive, it's still just sitting above 50% at $2.22. Any breakdowns at that level, going to be in some slight trouble. And then, of course, underneath $2 for XRP. Be on the lookout there. And for Solana, 187, still holding the 174, but still underneath 175. So it's really in this tricky position. Above here, stronger. Below here, weaker. And it's right between those two levels at the moment. Now, I'm no stranger to admitting that the tops in the market are the most difficult. At least that's the way I've seen the markets over the last 15 or so years. The tops, I think, are the most difficult to trade and invest in. Because on the one hand, there's a long time since the low. On the other hand, you can't be sure until the price breaks down from those key structural points. The benefit to where Bitcoin sits at the moment is that if it does break down, we're not too far from the high levels if there is a chance to take something off the table. So although the cycle has been what many are saying is one of the most difficult cycles, at least it hasn't been something that has just blown up and then had huge pullbacks where you don't have any of those pivotal points, those structural lows in the market that can give you signals to suggest maybe things are getting a little bit overworked here. So count your blessings. That's my message at the end of the video. I've got a line here on the chart to the downside from those highs. Not that I assume that everyone's piled in their entire portfolios at the top 2 or 3 weeks ago, but if you had, then some of those levels to the downside beneath these swing lows and the 50% would only take you down 22%. And I say only because when you're trading Bitcoin or cryptos, you're not expecting 20% to the upside. You're playing this game for hundreds of a percent. And so when you look at your risk reward, it's still a good risk reward. It's not to say pile everything in now, but just looking at it in terms of the mathematical and having a plan in place. Now, if you're looking to take things a little more seriously, last reminder here for TIA Premium, link in the video description. Capping and price rises are happening in the next 24 hours. Apart from that, I look forward to seeing you guys back at the next video. And thanks again for all of your support to hit 360,000 subscribers. I love that nice round number there, 360, a beautiful number there as well if you're a student of GAN. I'll see you guys back at the next video. Until then, take care and peace out.